XCIX, Ken Flag. Now, Mr. Flag, when was the last time we updated this sector? Because as I recall, we were shorting the top here at the beginning of May, and it's on the stockmarketfunding.com homepage. Is it not, sir? And did we call the top? Okay, so here's where this top was for 4-week reversal. Even though that it was overbought at the time, let's take a look at the standard value of standard technical analysis is that it had a counter trend here, but this is where its original reversal had started over here. And on the weekly level, it you know, at 69, 70%, 71%, that was getting top heavy over here. And we came down. But remember, computer technology is another piece of technology that led the broader market down when we called the February top. Didn't we call the February top reversal of the markets from an overbought process, Mr. Flag? And then we would, okay. So basically here on this weekly level, MMTs, we're down at 49.85%. So I would argue is that if this major weekly support does break, because you're below the 10-week and 20-week as far as weekly public analysis go. But just remember that those hedge fund managers and institutional managers, they all learn the same thing, and they're going to make decisions, okay? And we always call these decisions before the fact. Before the fact. Not after they've dropped 4 weeks. No, that doesn't do you any good. What does you good is that this was a lower high reversal from its original peak in 2011 over here, where we were at exactly the date was 2/6 of 2011. And we had a correction that started when we said it would. That was on 2/20. So go look on the S&P, Dow, NASDAQ comp reversals back in February. This led that NASDAQ comp and NASDAQ 100 down. It's also another double 4-week reversal in the peak of the 2011 peak high, reversal 1, counter rally, narrow range, 2-week buying little spree, but it failed. And we're right back here where those dips were being bought on 4/17 of 2011. The names that were involved, the culprits, the names, Apple, Adobe is good. Lots of great, good bull runs that have happened in these indexes, IBM being another one. Google certainly led this index in computer technology down. It's been a big loser in 2011, unfortunately. SanDisk is a great little stock that's in this index. These are just some of the names here that we trade. Cisco's been a dog on this one. Hewlett-Packard's been a dog on this index. Microsoft has been a dog on this index because, you know, Microsoft hasn't gone anywhere for over a decade. So Oracle has done well in this index. We like Oracle still. Oracle's got great things that's happening forward looking in computer technology into the smartphone build out. Intel, they produced a little bit and they finally got moving a while back. These are the individual names, so you know the names in this. And why does this sector trade a little bit different? What are its seasonality patterns? When should you be selling into the top? When should you be buying bull rally pullbacks? Everything that you should know on how to position oneself is all done within this weekly chart. We have 1 week, we have a 2 weeks below that 10 week. If there's 4 closing weeks below it, that is considered bear reversal instead of bull reversal pullback. Bear reversal and bull rally pullback reversals are quite different. And you'll learn that over time in your MMT environment, your school. Here on a monthly level for 2011, we can clearly see that when we got right here on this index, this thing was 93% overbought on a monthly. Give me a break. This reversal high here monthly was 93 as well. And it wasn't until we got right here in the month of March that we got below that to 92.61. And we've been putting in this multi-year top here is at 93.04 on a monthly, and this one drops because we said in May that we were having a pullback. A pullback, my new MMTs. The pullback consists of bull rallies, that rally for a significant period of time, and within those rally cycles, they get overbought and they pull back. The support level is going to be at the 10-month simple moving average for intelligent institutional traders and hedge fund managers. Will be making decisions there. We have had dip buying here, and we've had selling on top of that monthly wick. Professional money was getting out. Professional money was coming in. The 10-month moving average, Ken Flag, is at 934.84 on a monthly. And that monthly 10-month moving average is going to be a key support. The 20-month moving average, Ken Flag, is at 89.174. Please log that into the system because that's exactly where we're going to see on a monthly level going through June, July, and August is that they price these things from being overbought to levels that can be bought again within bull rally structures versus bear rally structures. So those are the names. We'll pick the leadership name. The pullback monthly May on the homepage of Stock Market Funding, we said it was time to start selling short those intraday highs in that technology index, that if they're reversing over here on a weekly level, that means that the actual stock itself that trades in this sector puts its intraday high in and then drops a dollar or two or three intraday, and it creates a short entry profitable MMT entry and exit by understanding why those prices are going to come down in the individual leadership names that are in this weekly and monthly index. Right now we're going to look to see how we hit support. I will tell Mr. Flag that if we break this support level right here on this 4-week pullback, is that your moving average is your 50-week moving average way down here. And that's at 921.57. The 20-week resistance level is going to be at the 20-week at 984.99, Mr. Flag. So if we do get some upside volatility trade, then we know where that key resistance level will be, Ken Flag. And the 10-week, please record that one there if you would. The 10-week is going to be over here at 976.50. We will use the daily and the 60-minute charts to let us know ahead of time. We'll set alerts that if they break this level, then more selling would also happen in the leadership, that the leadership would be in its pullback, bull rally pullback phase, and that the trade management on that daily level will be discussed using 3 15-minute, 60-minute, and daily charts. This is the longer-term view of computer technology moving forward. And the thing that I will tell Mr. Flag here is this blue bar here has been descending in value for 4 weeks. That's part of this top. This is what it looks like. Basically, we came all the way up to the bull rally tops that occurred back in here. Let's go back over here. These were bull rally tops back in this time frame. And that upper trend line at 1025 is during the bull rally, 2-year bull rally weekly. You can see how we burned that bottom off of this bottom in 2010. Bam! And computer technology was leading the way. And computer technology is another sector that plays a greater role in the overall NASDAQ comp and your NASDAQ 100. Key support level, resistance level, the names in the sector, and the leadership in the sector. And identifying long and short trades intraday based on using weekly, monthly analysis with standard technical analysis. Your decision processes will be made with the SMF Market Maker trading platform in these individual names that we pick out of this particular sector. Once again, happy Memorial Day, 10:07 a.m. Today's date 5/30/2011. This is the follow-up for the MMTs and the school MMTs and worldwide international traders as well.